A very, very good morning and a very warm welcome to all of you. I hope you people got sufficient time to revise the provisions which we discussed today. So before we begin today's class, which is our second class in capital gain, I would request everyone to please tell if there is any query in relation to what we studied yesterday. So we'll dedicate 5 minutes for a quick query session and we'll start with the topics forward. Have a nice day, everyone. Thank you. For the queries, anything I hope everyone studied about. So we basically started with the discussion on section 45. We understood what transfer is. We understood what short capital assets are. Then we understood how do we segregate between short-term capital assets and long-term capital assets. So all of this was done in the previous class. I hope there is no doubt in relation to it. If you have, we can dedicate 5 minutes. Those who are joining now, a very, very warm welcome again. Please reply with a yes or no. Okay. Perfect. Very good. So let's begin today's class. Now, abhi tak what we have studied is about what is actually transfer and capital asset, but we did not come to the computation of it. Right? We were just understanding in a layman term and also in technical term कि हाँ ठीक है capital gain happens in the year of transferability, but how do we actually compute? So students, I was telling you yesterday also that since the beginning we understand the term profit, we are told it is always sales minus cost, right? The sale price or the cost price. This is what we are told. Gains are always this, what you receive and what you have paid, right? But when we talk about capital gain, the terms become more technical, but the essence is same. The term becomes more technical, the essence though is same. What does the term stands for? So here, instead of the word sale price, we use the word full value of consideration. So we use the word full value of consideration instead of the word sale price. Why so? So, see, sale price is generally when there is a sale, understood? But we have seen a lot of transactions which come in the term of transfer, right? A lot of transactions which come in the term of transfer where there may not be a sale price defined to it, but or a consideration defined to it. But as per law, there are certain situations where we have been told that in so and so situation you have to take the consideration of it. In so and so situation, you take the consideration like this. So full value of that consideration is what we keep it as our sale price in a layman term. So we'll use the term full value of consideration. Paper maybe you will write this. Do not write sale price. Okay. उसमें से we reduce transfer expenses, direct transfer expenses like brokerage or any registry expenses which you paid. Okay, you get what? You get net consideration. इसको we can always I'll write FVOC. ठीक है, कोई doubt यहाँ तक? Clear. Then अब net consideration तो आ गया. We have not deducted the cost element. So in your computation of capital gain, you get two types of deduction and only two types of deduction, no other deduction. One is cost of acquisition and another is cost of improvement. So cost of acquisition and another is cost of improvement. Whatever comes is your capital gain or capital loss. It would be short term or long term, that we have to see. Abhi long term wale part time coming. Okay. So whatever comes is our short term is our capital gain or capital loss. Still, there is another step which is called exemptions, which we get from our capital gain, but that is something which we'll discuss after the class or so. Okay. So abhi tak till this point we have a computation as full value of consideration reduced from transfer expenses. We come to net consideration, then we have cost of acquisition, and then we have cost of improvement, and then we come to capital gain and loss. So today's class would be all about discussing how to compute this and discussing what is this and this. Okay? But now let's explain the cost of acquisition hota kya hai. Simple, the price which you pay to purchase is what we say, right? So whatever the cost has been spent on acquiring that asset would be your cost of acquisition, Now, yahan pe students, now when we are doing capital gains, now few of the sections you have to read with one another. Whenever we'll be doing some particular cases, section 49 will also be impacted. Section 47 will also be impacted. Your explanation to period of holding will also be impacted. So sabko we have to take it together to understand. I cannot just stand alone do section 48 and leave section 49, which tells about different cost of acquisition in different circumstances. I cannot leave section 47, which tells about what transactions are not transferred. So we'll come and I'll tell you how to bind one with another to understand the provisions. But again, I'll simply say everyone, do not rush, stay with me, and if you have any query, ask within there. Okay? So cost of acquisition is what you spend basically to acquire an asset. Cost of improvement, as the word says, is improvement. So any capital improvement which you have done to that asset is your cost of improvement. So suppose when I purchased a building, there was just one room, then I properly constructed a veranda, another room on it, and all those things, that would come in my cost of improvement. Painting, repairing is not improvement. Improvement is if you have improved the life of an asset otherwise. Okay. So generally cost of improvement comes in immovable property. The questions only. Movable property means there is a less part of this cost of improvement. Clear? Yahan tak kisi ko doubt? Pooja, is the screen fine now? Okay. Now, whenever we talk about long-term assets, remember long-term assets, they can be either held for more than 36 months or more than 12 months or more than 24 months, depending upon the type of assets, correct? Whenever we're talking about long-term assets, there is a concept of indexation. There's a concept of indexation. What is indexation and why it is there? First of all, let me give you an example. You purchase a property somewhere around, say, 2005, close to 17-20 years back, for a value of 40 lakhs. Now today, its value, when you sold it, it is almost 1 crore. Now, will you say that 1 crore minus 40 lakhs is my capital gain? Will you say that? Isn't that unjustified? Because अब ऐसा भी हो सकता है, you are selling your properties which are like old, extremely old, and at that time the value of the properties and the value of the money would have been 1 lakh. वो कहते हैं ना कि उस जमाने का 1 lakh आज की डेट में is 1 crore. People say like this, correct? So is this justified that taxing 60 lakhs as income? Is this my real profit? No. Inflation has happened and the cost of this asset, if inflated to today's time, would be much more. Students, always remember one thing: you are an assessee. Okay, you are a person who has to compute capital gain. Correct. More the cost of acquisition or more the reduction part, the more the exemption part, or cost of acquisition or cost of improvement. That means less the profit for you. Correct. Less the profit for you means more favorable situation for you, and that is what we always aim at a taxpayer, but in a planned manner and not in an evaded manner, right? So, more the cost of acquisition means more the deduction means less the profit means less the tax. So, always you will aim that your taxes are less. Now, coming back to this concept. So, reducing from 1 CR just 40 lakhs is not right. So, hence, as per my second proviso to this computation wala section, they say that in case of long-term capital assets, instead of reducing cost of acquisition, you will reduce indexed cost of acquisition. Instead of reducing cost of acquisition, you will reduce the indexed cost of acquisition and not just the cost of acquisition. Now your question will, ma'am, how to calculate this indexed cost of acquisition, right? So, cost of how to calculate this index cost of acquisition. Now, we are provided with CII, which is called Cost Inflation Index. What is CII? Cost Inflation Index. Every year, there is the inflation index which comes out for that particular year, and you inflate the value of the year in which you purchase the asset to the year in which you are transferring. कि आज उसका value क्या होगा? What would have been if I went to purchase this same asset at the same price in today's time? What would have been the cost? So you inflate that cost to today's time. Now, how will you inflate the cost to today's time? Is what your question might be, right? So in exam, you would be given cost inflation index for each financial year. Generally, this whole table would not be given, only the years which impact your question would be given. So if in my discussion, we are discussing about financial year 5-6 and financial year 2021, only those year 21-22, only those financial year would be given. Yeah, to confuse 1 year or 1 year before or 1 year later or any other financial year which is in question, that could be given, but not the entire table. Okay? So entire table nahi diya hoga question mein, but yeah, definitely the cost of inflation index would be given. You are not required to remember all of these. You are not required to remember all of these. Only thing which you require to remember, if required, is present financial year, which is your respective financial year ka inflation index, which is 317. Ma'am, but how do we calculate? Yeah, coming back to it. Of 40 lakhs ka value, I have to calculate as per the indexed value for today's time, right? 2005-6 May, the value was 40 lakhs. When the cost inflation index was 117. Clear? And today's time, my cost inflation index for my financial year 21-22 is 317. Is 317. Simple unitary method everyone knows. 117 जब index था 40 lakhs was my value. Today index is 317. So what would be my value? Simple 40 by 117 into 317. Can I just simply do this? Yes. So what would be my value today? This 40 lakhs the value with inflation has now come to 1.8 108 lakhs. 108 lakhs. That means if the same property if I acquired today, the cost would have been 108 lakhs. So something which was showing you on direct 60 lakhs the profit is actually now 8 lakhs the loss. 100 lakhs minus 108 lakhs is now 8 lakhs the loss. And how did we come to that? By inflating and bringing the value of that time to today's time. But this only happens in your long-term asset. Only happens in your long-term asset, not for every asset. Not for short-term gains, only for the long-term gains. Clear? Yes. Now, ma'am, what about cost of improvement? What about cost of improvement? Again, simple. I'll say the same example. 40 lakhs I purchased it in 2005 and 6. There was only one room and the veranda. I constructed 2 more rooms, and 2 rooms were constructed in 2007 and 8 for a value of 10 lakhs. So the way I inflated and indexed the value of this 40 lakhs to today's time, I will index the same value in the same way the cost of improvement का value. So 10 lakhs into 317 क्योंकि मेरे को 21-22 years पे आना है, divide by 2007-8 index, which is 129, and hence it would give me the value of 10 into 317 by 129, somewhere around 25 lakhs. So my net capital loss or gain would be 100 lakh, which is my full value of consideration, minus, there's no transfer expenses, minus index cost of acquisition, minus index cost of improvement, and hence there's a capital loss of 33 lakhs. Now, if you would have done it at a simple manner without indexing it, you will say, okay, 50 lakhs are profited. No. So can I say indexation happens to the cost of acquisition or cost of improvement by multiplying it into the year of transfer, by dividing it by the index, multiplying it into by the CII of the year of transfer, and by dividing it on the CII of cost of year of acquisition or the year of improvement, right? But again, do not ratify why we are multiplying into transfer and why we are dividing into the year of acquisition. There is a simple unitary method to it. Now your question before, ma'am, the inflation index which is given here is from 1 and 2. What if I have purchased a property before 1 and 2 is what I'll answer. But before that, I want you to calculate once Second, yeah. I want you to give me an answer of an asset. So the full value of consideration is for the financial year 21-22 for property sold. Full value of consideration is 70 lakhs and the cost of acquisition is 40 lakhs. It was acquired in year 15-16 and improvement happened in an year 16-17 for a value of 5 lakhs. Everyone quickly tell me the index cost of acquisition. So all the data is in front of you. 21-22 ka values 317. Otherwise, every data is in front of you. Quickly tell me the capital gain. Or the capital loss which is coming out of the situation. The capital gain, this is a property, suppose, tell me the capital gain. The first one to answer correctly is Sumit. Very good, Sumit. The answer is correct. I'll just wait for 30 seconds more to reveal the answer. Very good, Pooja. Tanishka has also answered correctly. Anantapa has also answered correctly. Mayur, no, your answer is not correct. I want the capital gain value. Ankit, good. Shriya, no, no, no. Akashni, no. Very good, Tisha. So the correct answer is the capital gain. The long-term capital gain is 14 lakhs. Those are not getting, I'll give you more 30 seconds to see where you are doing it wrong. The correct answer is 14 lakhs. No, Mohit? No, not at all. Analyze where the mistake is happening. No pressure. Take your time. Good, Shruti. So those have not got it correct. When you create this cost of acquisition to an index cost of acquisition, always use the word index. I'm saying it again and again. This 40 lakhs would come to 50 lakhs. How? 40 into 317 divide by 15, 16 index, which is 254. It will come around to 49.92 so it is 50 lakhs. And 5 lakhs index cost of improvement would come to into 317 divide by 264 would come to exact 6 lakhs. So 56 lakhs would be your deductions which you will be claiming as cost of index cost of acquisition and index cost of improvement from your full value of consideration. Hence 14 lakhs is the correct answer. I hope those who did not get it correct got your mistake. See, if you do the mistakes now, you'll not do that in exams. It's always important to practice. No worries. I hope now. Abhinav Reddy, what mistake you did earlier? Pretty good. Mahadev, good. Vakeshwaran C, did it? Is it right now? Mohit, did you get it right now? Shriya, Mayur, is it now correct? Good, very good. Okay, so I hope now you got how to calculate the index cost of acquisition and the index cost of improvement and come to your calculating. Correct? Do you want to do it one? Give me one more example which will calculate quickly. No worries, no worries. Okay. So quickly, very easily tell me. Sorry. Asset was purchased in the year 2001 and 2 and that is a gold jewelry. 1 and 2 May I purchased it for a value of 2 lakhs. For a value of 2 lakhs. Now let's twist the question somewhat. Okay. Tell me at what price it should be sold that there is no loss. Minimum what price at this should be sold that there is no loss. This was purchased for 2 lakhs. At what price minimum this asset should be sold or this gold should be sold in financial year 21-22 so that there is no loss to the assessee. Okay, so the first one to get the correct answer is Swaroop. Very good, Swaroop. And others who have also correct answered it, Mayur, Tisha, Bandra Reddy, Mahadev, Bhadraj, and Mohit, Mageshwar, Tisha. I think everyone has given correct. Jyoti, it's not 4,34,000. The correct answer is 6,34,000. Simple. Very good, Sumit, Tanishka, Anandappa, very good. So it is very simple. You have to, if a question like this comes in your exam, that what price minimum the asset should be sold so that there is a no loss situation. It is basically when you are covering your cost of acquisition. So whatever your index cost of acquisition will come, at least that should be your full value of consideration. Because if something less than that would result in loss, something less than that would result in loss. So always simple, sir. 2 lakhs into 317 divide by 100. Clear? Okay, so now let's move forward. So I was telling you about index cost of acquisition. Now the question which might be coming in your mind again and again, what if, ma'am, what if that the asset is sold or the asset is purchased, sorry, before 2001 and 2. Before 2001 and 2, what if the asset is purchased before 2001 and 2? Then what will we do? Because obviously, ऐसा तो है नहीं कि all assets have been sold which were purchased before financial 2001 and 2, but the cost of inflation index starts from 1 and 2, then what has to be done? It is very, very, very simple. Let's understand it. So, students always remember when to use the term fair market value, when to use the term stamp duty value, because both of them are not exactly same. Fair market value and what is full value of consideration. I've seen people getting confused between these things. First of all, full value of consideration, which was understood is what we take it as the price from which the deductions would be computed for the purpose of capital gain. Okay, it can be the sale price, it can be any other price which is as per the law. Okay. What is fair market value? कि market में उसका fair price was, what was the price at a particular point. What is stamp duty value? Stamp duty value is the value where at which amount the registry happens. The registry happens on a particular date. So generally, stamp duty value is a concept which we use for immovable property. And fair market value generally is used for movable property. In general, never ever make a mistake to write stamp duty value in case of car or in case of gold. No, stamp duty value is generally for immovable property. Okay? Always remember this. Now coming back to the concept of what about the assets which are purchased before, or assets of property which were purchased before 1st April 2001. Right? Now think yourself as a CSE. They say, पहले क्या था, when I was studying the CA, the cost inflation index which was given to us in exam began from the year 61-62. Began from the year 61-62 and it was going on and on and on and on. So now with 50 years of cost of inflation index and more than 50 years of cost of inflation index, the government shifted the base. Because again, to develop any index, if you have statistical knowledge, to develop any index, there should be a base. The government shifted the base from 61-62 to 2001 and 2. So now, hence, from 1 and 2, and the base is always taken as 100. That's why 2001 and 2, the base is 100, which we saw here also. Correct? Earlier, this base which was there was for 61-62, and उस 100 के base को लेके the price was, the cost inflation index was developed. Similarly, a 1 and 2 को 100 का base लेके every year कि उस 100 में कितना inflation आया है. That means till date there has been an inflation of close to 200% to get here. So अगर 100% inflation होता तो that would have been 200. So 2001 and 2 में जो था आज वो 200% महंगा हो गया है, right? 200% महंगा हो गया. This is what this cost inflation index means. Again, there is no necessity that you should understand it, but understanding it would help you relate it better. Okay, so what was the price if something was of a price of 101 and 2 actually cost today 317 rupees, and it can be obviously a less or a more, but yeah, as per the statistical data, the government statistical data of inflation, This is 317, and it is not just calculated, okay, आज उठे and 317 inflation index 1. No, it is properly calculated as per the inflation value. So it is not something which is randomly calculated. Okay. So back to the concept. So what is 100 at that particular time is 317 today. But what about the before time? So I was telling that 60-61 का base करके अगर उसको हम आज की value पे ला देते, the correction, there was lot of calculation involved. The data would not have been correct. Hence they shifted the base to 1 and 2. When they shifted the base to 1 and 2, if the base is shifted, you have to shift the cost also. So they said for the assets which are purchased before 1st April 2001, what you do is you take the cost or the fair market value, whichever is favorable to assessee at his option. Whichever is favorable to assessee at his option would be your value as on 1st April 2001, and then you inflate it. Ma'am, I did not understand. So you have to take fair market value on 1st April 2001, and you have to take the cost at which you purchased it. Now, whichever is higher is what you will take, and you will bring it to the value as on 1st April 2001, and then you will inflate it. Let me give an example. You purchase a gold jewelry in the year 1998, 1999 for a value of 4 lakh. The fair market value of the same as on 1st April 2001 is 6 lakhs. For example, okay, what will you take to bring it? मेरा inflation index start कब से हो रहा है? CII is starting from 2001 2. So I have to choose a value for 1 and 2 to inflate it, right? So that you can choose either the actual cost or the fair market value, whichever is beneficial to you. The Act does not write whichever is higher, they write whatever the assessee takes as an option. He can claim 4 lakhs also, he can claim 6 lakhs also. There is no mandate to claim the higher amount, but obviously think yourself as an assessee and you will claim obviously the higher amount. Why? Because higher the cost, higher would be the indexation value, less would be the capital gain, right? So 98, 99, yeah, fair market value as on 1st April 2001, whichever is higher or I should say whatever option the assessee goes for, that he will take, that would become your cost of acquisition as on 1st April 2001, and then you will index it. So now for a jewelry which was purchased in 98, 99 or for a 4 lakh value and the fair market value of which is 6 lakhs. So my cost of acquisition as on 1st April would be 6 lakh, and now 6 lakhs ko I will index for the financial year 21-22, basically the year of transfer. Okay, clear हुआ? Now, for example, suppose karo gold price would have fell in 2001 and 2. So 98, 99 में the gold which you purchased for 4 lakhs, uska value as on first April 2001 was hardly 3,50,000 because the value dropped, suppose. So what you will take as your fair market value, what you will take as your cost of acquisition on 1st April 2001, that would be 4 lakhs or 3,50,000, 4 lakhs. So 4 lakhs, तो फिर उसके बाद you will index it as per the value. Clear हुआ? This is given in your section 55, which is your section for cost of acquisition. This is not given in Section 48. Section 48 is all about computation of capital gain. This is your cost of acquisition का section. ठीक है? Now, one more thing which you have to remember is that when you are talking about fair market value, but for your buildings, basically immovable property, the fair market value should not be more than your stamp duty value. Should not be more than your stamp duty value. So if suppose your cost of acquisition for a building which you purchased in the year 1990-91 was 10 lakhs. Your fair market value as on 1st April 2001 is 15 lakhs. And the stamp duty value as on 1st April 2001 is 14 lakhs. So you will not say कि मैम ने तो बोला था cost of acquisition and fair market value, whichever is beneficial, take it that. In such situation, you always have to remember that the stamp duty value cannot be more than fair market value. Hence, you will compare your cost of acquisition and the stamp duty value. So 10 and 14 में 14 lakhs. Hence, your cost of acquisition for the purpose of indexation, which is as on 1st April 2001, would be 14 lakhs. 14 lakhs, 14 lakhs you will index it as per the indexation of base year. But if on the contrary, cost of acquisition would be 10 lakhs, fair market value would have been 15 lakhs and stamp duty value have been 16 lakhs, then what would have you done? Then what would have you chosen? Then Baba, it would have been 15 lakhs. You will not directly compare stamp duty value and cost of acquisition. No, it would never be direct comparison. Comparison would only come when the stamp duty value is less than fair market value. So here it would be 15 lakhs and not 16 lakhs. The cost of acquisition as on 1st April would be 15 lakhs into 317 upon 100, because nowhere it is written that in case of immovable property you have to take the stamp duty value as your cost of acquisition as on 1st April 2001. It is only written that in case your fair market value as on 1st April 2001 is should not be more than your stamp duty value as on the same date. Okay, clear? किसी को before 1st April 2001 में कोई question है? Anyone has any question for this concept? Yes, Bharat, index price would be provided in your question paper, always. Yeah, Kaveri, somewhere around 14 lakh. I've not rounded off to the exact points. Clear hua? Do you want me to repeat it again? Because again, move step by step, do not rush. Today is an important class, please. Okay, Mankesh, I'll do that. Okay, that sustain. I'll repeat it, that part again. No worries. Yes, Mohit, stamp duty value changes. See, practically, if you will see the rate circle rates remain same for a long time, but yeah, it do changes. It do changes. Okay, so Ankur, everyone on the screen again. So what did I say? Simple सा question है. Step by step चलते हैं. You have to inflate or you have to index your cost of acquisition in case of long-term capital assets only. Okay, how will you index it? Multiply it into the year CII of the year of transfer divided by the CII of the year of acquisition or the year of improvement. Clear. But when you will see your CII, it starts from 2001 and 2. Now, the moment it starts from 2001 and 2, you are not clear that whether what happens before to the assets which are purchased before 2001 and 2. So for that case, what you do is you compare the cost of assets and fair market cost of asset when you acquire it and fair market value as on 1st April 2001. You compare it, whichever is beneficial to you, you choose that as your cost of asset as on 1st April 2001. Generally, the people would get whichever is higher. Whichever is higher. Why they will choose whichever is higher? Because that would give them the more benefit, more benefit for the reduction from the purpose of capital gain. Correct. Now, whenever there is immovable property, you have to ensure one thing that your stamp duty value should not be should not be or I should say your fair market value should not exceed your stamp duty value. Your fair market value should not exceed your stamp duty value. If it exceeds your stamp duty value, then your stamp duty value is what you have to take for the purpose of comparison. Otherwise, yeah. So otherwise, you will always take the fair market value. What did I say? If the stamp duty value is less than fair market value, so for the purpose of getting cost of acquisition as on 1st April, I will compare the cost of acquisition and stamp duty value. I will not compare the cost of acquisition and fair market value. Okay, always I'll compare it with the stamp duty value. But if the fair market value is less than stamp duty value, I'll always compare the fair market value and cost of acquisition. See, again, nothing to ratify the concept of cost of acquisition and fair market value. But in case of immovable property, always see that ये fair market value stamp duty से ज़्यादा तो नहीं है. That this fair market value is not more than stamp duty. If it is, remove fair market value from your concept and compare stamp duty value and cost of acquisition. Clear? अब किसी को कोई doubt? In case the cost is more than SDV, the stamp duty value, you will always take the cost. But fair market value cannot be more than stamp duty value. Simple. No. Stamp duty value Ananta as on 1st April 2001. Comparison के लिए base दो dates तो same होना चाहिए, right? Paper में it would be always given about the fair market value, always be given about the stamp duty value. You do not have to worry about. Values दिया होगा, inflation index दिया होगा always. Okay. Correct, Mahadev. Absolutely. चलो अब प्रोसीड करें. Ankit, then in that case, you'll go for 15 lakhs as cost. तनिष्का, फॉर यू कैपिटल एसेट सेल आपको इस साल का देखना है. अगर उस साल में सेल हुआ है तो देन यू हैव टू सी द लॉन्ग टर्म फॉर दैट पर्पस. Okay. Now moving to the next concept. So अभी तक we discussed indexation होना होता है, right? As per second proviso. You do not have to remember it, but I have in habit to write so that there's a clarity. Second proviso to section 48, indexation happens for long-term capital asset. But one thing always remember, what my fourth proviso says, when we talk about bonds or debentures, they are also my capital assets. Yes, bonds and debentures are also my capital asset. If I purchase bond, if I purchase debentures, they are also my capital asset. And इसमें long term कब होता है? When it is 36 months, correct? But bonds and debentures never get indexed. Even if they are long term, there would be no indexation on bonds and debentures. You will ask, ma'am, why? Why, ma'am? Why? Because think, debentures and bonds are what type of loan? Does loan ever gets appreciated? No, it's like a loan. Loan तो कभी appreciate नहीं होगा ना with time. वो तो उतनी का रहेगा, right? So that's why we never apply indexation on bonds and debentures. Okay? So never ever in a bond or debenture patient apply indexation. Simple, whatever you're getting, which is the full value of consideration minus cost of acquisition. No indexation. But yes, having said that, there are two types of bonds on which indexation is allowed. On which indexation is allowed. One is your capital gain index bonds. Another is your sovereign gold bonds. Only in these two cases, indexation would be allowed. Otherwise, because नाम ही index bonds है, तो इसमें तो आएगा ही आएगा indexation element. And these are gold bonds, so gold में indexation is allowed. That's why here also indexation would be allowed. Otherwise, for any bond or debenture, there would not be any indexation. ठीक है? Clear हुआ? Moving forward. Okay. Seventh proviso to section 48 say, again computation the section में, that STT is not allowed. What is STT? Security transaction tax का deduction is not allowed. Even it is a direct expense for transfer, इसका deduction would not be allowed from the full value of consideration. If you can relate, when you did section 36, वहाँ पे it was written security transaction tax का deduction would be allowed. Relate yourself to the PGBP part. वहाँ पे it is written security transaction tax and deduction would be allowed. But यहाँ पे it is written it is not allowed. So basically what are they trying to say is that when you are trading into shares and shares से जो income आ रहा है, it is not your PGBP, not your capital gain income, but a PGBP income, then security transaction tax का reduction would be given. But when you are investing in shares, trading is different, investing is different. Investing in shares and you sell your share and you have paid any security transaction tax, that you have to ignore for the computation of capital gain. कोई deduction नहीं मिलेगा. Okay, there would be no deduction for STT. Clear? Now we come to So abhi first proviso is left, second proviso is done, third proviso is left, fourth proviso is done, fifth proviso is left, sixth proviso is left, and seventh proviso is done. Okay. You don't have to remember the proviso name, but final may if you'll go, this will be very important. Okay. So this is like a brushing up for your final level also. Now we come to a very, very, very important concept, which is my third proviso related also. And together I'm reading with section 55. What is the concept? Everyone, please 5 minutes ke liye forget everything and now back to the screen again. We are understanding the cost of acquisition for a long-term capital asset, which is in the nature of equity shares of a listed company or equity-oriented mutual funds. मैंने आपको स्टार्टिंग में ही बोला था कि when we are talking about capital gain, not only just one section happens, you have to study 2-3 sections together. So now we'll study 2-3 sections together. On the screen, please. I'll give you time making notes. Abhi no one will make notes. Okay. What did I say? Long-term capital asset in case of equity shares, listed equity shares or equity-oriented mutual funds. But technically it is said equity shares on which STT is paid at the time of purchase and sale or purchase and transfer, or equity-oriented funds in which STT is paid at the time of transfer. So what generally STT happens when the stock, the share is listed on stock exchange, on a recognized stock exchange. Okay. So equity shares where the STT is paid on the time of purchase and transfer, equity-oriented mutual funds where the STT is paid on the time of transfer. So this section which we are discussing now is solely for the asset which I've said and only in the nature of long-term capital asset. I'm not talking about short-term. Okay. So for the ease of understanding, you will say equity shares which are listed, because generally if a listed share is traded on stock exchange, always STT would be paid. Okay. Now come to it. First, let me tell you a short story. I don't know how many of you know or not. Prior to budget 2018, this is almost 4 years back, long-term capital asset on equity shares, listed equity shares, was exempt. So to make India an attractive market for investment for people around the world and otherwise, stock market का value बढ़ाने के लिए क्या हुआ? Around 15-20 years back, they made long-term capital gain on equity shares as an exempt income. Exempt income होता था section 10 के अंदर, that no matter what amount of gains you're having, it will never be taxed. So that's why people had a psyche to invest in equity market. Why? And that too for a long-term purpose, because whatever the gain would come, they do not have to pay any tax. So basically, okay, people in the year 2000 especially, there was a trend, people started investing in shares for their long-term goals, like getting their students, getting their children married, getting their children, sending them abroad, because gains were getting accumulated, and when you were withdrawing those gains, you did not have to pay any tax. So it was a win-win situation for the economies also. People were investing for a long-term purpose and for the people also, because nothing was taxable. But this was the story up till your year, before the budget 2018 came in. Now, when the budget 2018 came in, it came in as a shock. The finance minister, then finance minister, later Jaitley, said that there would be tax on long-term capital asset. There would be tax on long-term capital gain coming from listed equity shares. There would be tax on long-term capital gain coming from equity shares. Now, budget comes on 1st Feb. Okay, 1st Feb 2018 को they declared this. Now, think of a person जिसने 2001 and 2 में मार्केट में पैसा डाला, who actually deposited and purchased equity shares in 2001 and 2. Suppose hardly 50,000 का shares he purchased and उसका value 2018 में, when this person when the finance minister announced the budget, the value of those 50,000 rupees per share was 50 lakhs. Suppose 50 lakhs. भाई किसी को भी बैठे बैठे he will go in a lot of tension that now around 45 or 46 lakhs, whatever, my gains would be taxable. I have to pay tax on it. And वो तो बैठा हुआ था इसमें कि I do not have to pay any tax because nothing is taxable. Nothing is taxable. That's why he invested for such a long period, right? So that you will say, ma'am, wasn't it unfair for the people? No, because they came up with the concept of grandfathering. They said that we are not giving you a shock. We are not giving you a shock since we have announced it today that whatever gains you have, long-term gains you have on listed equity shares, that would be taxable. So we will allow you to bring all your costs to today's value, and whatever now which you make as profit, will be taxable. So that means they grandfathered the cost of whenever they purchase to the date which is 31st January 2018. ठीक है, 31st January 2018 पे वो सारे costs को ले आए. Why they did so? Now you understand the theory. For this 2-minute story will help you relate to the concept of this grandfathering. So I was telling you about the person जिसने 2001 and 2 में who would have invested at 50,000, right? Now the date on which this person on which the finance minister announced that the capital gain would be taxable, उससे एक दिन पहले the market got closed and the value of these 50,000 share was suppose say 10 lakhs also. ठीक है. So what did they say? That you grandfather your cost to the value today. Now the moment you grandfather your cost to the value today, that means your cost of acquisition would now become this. So now from going forward at this value, whatever gains you have now going forward, that would be taxable. So all your planning is not in vain. We are allowing you to bring your cost to today's value, today's exact value which is there on market. Market जितने पे close हुआ था, the final trading price, we are allowing you to bring it to that value. Okay, so in that case, whatever gain which has happened from this 50,000 to 10 lakhs, around 9,50,000 ka gain, we are grandfathering it by bringing it into the cost element. अब वो cost आपका shares का would not be 50,000, would be 10 lakhs. Okay, so if someone can relate to the story, you can see the markets in 2018, 1st February after this announcement. The market crashed like anything because people started withdrawing their money thinking that, oh, we do not want our gains to be taxable. But they did not think that whatever price which is there till 31st January 2018, they were allowed to grandfather it. Okay. So now back to the story. What did I say? Simply, whatever was the cost of acquisition of such shares, you will grandfather it to the fair market value as on 31st January 2018. As on 31st January 2018. So can I say, suppose you purchased the share when the cost of one share was 15 rupees per share. ₹15 per share. In the year 2005-6. Now, the cost of the fair market value as on 31st January 2018 for that same share is 150 per share. So now your cost of acquisition would be 150. 150. Okay? Clear हुआ? Anyone has any doubt up till now? Simple. Whichever is higher, wala concept is applied again. But whichever is higher. If you see, ma'am, if my cost of acquisition कोई ऐसा share था which was not doing good, if my cost of acquisition was suppose 30 per share and the share was not performing well and its fair market value as on 31st January 2018 is 17 per share, then do I have to take it at fair market value or the cost? Then I'll say at the cost. Whichever is higher you have to take. Okay. But यहाँ पे also they included one element. What is that element? Let me explain you that. Whichever is higher, they said. यहाँ तक समझ आया? Correct. Now, here comes the critical part. I could have simply told you to compare it, whatever is given in your book, but no. Let us try to explain the concept. Cost of acquisition was 15 per share. Fair market value is 150 per share. Okay. Now, when I actually sold it, suppose I sold it on 20th April 2018. Okay. The sale price was 180 per share. Okay. So what will happen? 180 minus 150. 30 would be your capital gain. Always remember, students, one thing, as per third proviso, this is all calculation is as per section 55, but as per third proviso, they say to such calculation, you will never index. No indexation would apply to listed equity shares or equity oriented mutual fund in long-term capital asset, even though there is a long-term capital asset, no indexation would apply. No indexation would apply to such shares. So on equity shares where STT is paid on both purchase and transfer and on equity oriented mutual funds, if there's a long-term capital gain, no indexation would apply. Okay? Even if the share is held for 15 years, 20 years, no matter what. Okay? Now back to this. The nature would be long-term again. In this case, the nature of the asset is long-term and the nature of gain is also long-term. Just because you have taken the cost as on 31st Jan 2018, it does not mean that you have sold it on 20th April 2018, it does not mean that your nature of asset has changed. No. Only the third proviso says that we are not allowing indexation because we have given you grandfathering mechanism. You have brought the cost to the recent value. Indexation would not be allowed. Okay. So now in this case, you are seeing 180 per share pay, you sold it. Your cost of acquisition after grandfathering is fair market value as in 31st January 2018, which is 150. And hence your long-term capital gain is coming to 30. This is correct? Yes. Now, one thing remember, student. Suppose the sale price as on 20th April, क्योंकि market crash हुआ, the sale price as on 20th April, the full value of consideration basically came to 100. And आपका cost of acquisition क्या है? Fair market value or the cost fair market value as on 31st January 2018 or the cost, whichever is higher. So you took 150 as per this example. Right. Your loss is coming off 50 per share. Yes. But I'll say no. I'll say no. Now listen to the concept here very carefully. Why I am saying no? Because is this an actual loss to you? आपका cost of acquisition क्या था? 15 rupees per share, right? Your sale price is 100 per share. Just because of this grandfathering mechanism, you are able to claim a higher cost of acquisition, right? And because of that only, you are getting a loss. And because of that only, you are getting a loss. Had there would have been no grandfathering, 15 rupees per share, you would have been sold at 100 rupees per share and you would have got gains. Just because of taking the fair market value, at 150 per share, you are getting a loss. Correct? So, and by getting a loss, that means you can claim it as benefits from the future capital gains. So the government said, just because of this, now there is no actual loss to you in real sense. If you see, there is no actual loss to you in real sense, but just because of this, it is coming. So the government said that just because of the mechanism which we allowed to you, you are getting a loss. So what we will do is, we will restrict a comparison of cost in a way that your cost of acquisition for equity shares which are acquired before 1st February 2018 would be like actual cost of acquisition or fair market value, whichever is higher you take. They say we will include one more step. First, we will compare fair market value and actual sale price or the actual full value of consideration. First, they will take actual full value of consideration. Isme se whatever lower comes, first he will take that, and then whatever higher is there, then he will take that. I would have simply explained you this without getting you the actual reason, which is that because of taking this fair market value, he should not get a loss. He should not get a loss just because of this. That's why they are comparing the full value of consideration on the date of sale. Compare it with fair market value on date of what? 31st January 2018. Whichever is lower, then compare it with the cost of acquisition and then take the higher amount. So let's prepare a table for it. Then I will take all your queries. Now, first of all, the nature of capital gain in this case is long term. Why? Because the asset was acquired on the asset has been held for more than 12 months and it's a listed equity shares. Now take first example where my cost of acquisition is 100 per share. My fair market value is 160 and my sale price is 200. Okay. What will happen here? What would be my actual my cost of acquisition for the purpose of computing capital gain as per section 55? it would be simply 160 and my capital gain would be 40 per share long term. Okay? No indexation allowed. Then let's take another example. My cost of acquisition is 120. My fair market value is 110. My sale price is 130. What will happen? You compare the lower 110, then you take the higher, which is 120. And your capital gain would be 120 minus 130 minus 120, which is 10 rupees. Okay, now let's take another example. This is 150. This is 140 and this is 200 and this is 180. Then what will be the case? Simple. My cost of acquisition would be 180 and there would be no loss, no gain. Okay? Why? Because if you would have taken 200 simply by comparing it with the cost of acquisition and fair market value, it would have been resulting in a loss where actually it was not a situation of loss. Okay? Next. I want you to give me the answer of this. This is 140, okay? Fair market value. Tell me the cost of acquisition. Here, what would be the cost of acquisition? As per section 55, and the gain would be clear. Anyone now has any doubt? You can see this. This is only and only and only for listed equity shares, or if as per the term says equity shares on which STT is paid at the time of purchase and transfer, or equity oriented mutual fund on which STT is paid at the time of transfer. Acquired before 1st April 2018. Ma'am, what about the shares which are acquired before 1st February 2018? What about the assets which are acquired after 1st February 2018? What will happen to them? So for the assets which are acquired before after 1st February 2018, उसमें simple mechanism है. Whatever is the cost, you will reduce it from the sale price. Indexation will not be allowed. Indexation would not be allowed on such long-term equity shares which are listed on stock exchange and is paid on both purchase and transfer. Indexation would not be allowed. I'm repeating again and again. Okay. Now, what about the share is purchased before first? What about the share is purchased before 1st April 2001? So simple. In any way, you have to grandfather it to 31st January 2018. So that is not an issue. Bring it to the value of 31st January 2018, whichever comes beneficial to you. Take a moment and let me know if there is any doubt. Because if you get this concept clear, it will be very, very important. I'm telling the people at final level still do not know the reason why they are comparing it first the lower amount and the higher, and then comparing it the higher amount. Very good. So with this, I'll take a break of 10 minutes. We'll come back at 8:30, whereby we'll be understanding the more types of cost of acquisition and some more critical computation. Okay. Okay, so see you back in 10 minutes. Yes, Mohit, you can say that. So welcome back after the break, everyone. I hope the concept of cost of acquisition for long-term capital asset, equity shares, and equity-oriented mutual funds listed on a stock exchange is clear. Pooja, and try sharing the notes by today or tomorrow. You'll get the note by. Okay? Is it clear? Sure. So now we not taking much of your time. Let's proceed with more types of cost of acquisition. Second. Now let's discuss about cost of acquisition for bonus shares. What are bonus shares? Bonus shares are the shares which you get for free, right? Because of you being a shareholder, you get shares for free. If the company wants to dilute its EPS, which is equity per share, earning per share, then they issue more shares. So more shares, the earning per share obviously reduces. So that is called bonus shares. That is called bonus shares. So think yourself as a shareholder, did you pay anything for it? No. So your cost of acquisition is, in case of bonus shares, is nil. The cost of acquisition in case of bonus share is nil. But what about if those bonus shares were received before 1st April 2001? Before 1st April 2001, then what you will do? You will take the FMV as on 1st April 2001. We take the FMV as on 1st April 2001. Okay, ma'am, what if they are the bonus shares which of a company which is listed on a stock exchange? Then what will happen? So again, if there are the bonus shares which are allotted before 1st April and before 1st April, I'm saying before 1st February 2018, they were allotted before 1st February 2018, then what will happen? Then simple, Papa, there's not the same concept. Cost of acquisition, actual cost of acquisition, or actual cost of acquisition and FMV as on 31st January 2018, or the actual sale consideration, whichever is higher, compare it with the cost of acquisition, whichever, you have to consider, whichever is lower, compare it with the cost of acquisition, whichever is higher, that you will take. Clear? किसी को कोई doubt? So if cost of acquisition is nil, then nil minus, compare it with the FMV as on 31st January 2018 and actual sale consideration. So suppose you're taking FMV and nil value. So FMV would be cost of acquisition. If the cost of acquisition is the FMV as on 2001, suppose it is allotted before 2001. So 2001 ka FMV and in dono mein se whatever is lower, compare it that whichever is higher, you will take that. Clear? This is in case of bonus shares. Now we move forward to understand a very, very simple yet complex issue, which is called right shares. What is right shares? Now, as the name suggests, right share means the person has a right to such shares before it goes into open market. अब क्या होता है generally, if a company needs equity capital, suppose a company needs equity capital, instead of going to the market to the IPO, because वहाँ पे cost बहुत ज़्यादा होते हैं, there's so many compliances, they offer the shares to the existing shareholder at a predetermined price, which is much less than the market price. So suppose market price of share का 300 है. So they offer the person, the existing shareholder, a right to take that share at a 200 per share. They're already a shareholder. They are already a shareholder. So let's take an example with a story. Mr. X purchased the shares of ABC Limited. Okay. He purchased the shares of ABC Private Limited. Okay. Or let's keep it limited. Mr. X purchased the shares of ABC Limited when the share price was 150 per share. Okay, so in 2019, suppose he purchased the shares for 150 per share. Now in 2021-22, the company went to him and to all the shareholders to say that market में अब share का price is 300 per share. We are offering you the same share for 200 per share. We do not want to go and get the IPO done and all those things. So same हम 200 per share पे दे रहे. So it's like a quite competitive price if you see, right? So Mr. X, so already 100 shares के shareholders है, right? Now what has happened? Mr. X has got a right. Mr. X has got a right. Think yourself as Mr. X now. Mr. X के पास तो now he has a right to do or not to do. Is Mr. X under compulsion to take this 200 per share? No. He is not under a compulsion to take this 200 per share. So if he does not take any share, will there be any impact? No. He has not taken any share. But if he take any share, what of such right issue, then what would be the cost of acquisition of such share? The cost of acquisition would obviously be 200 per share, not 300, not 150. The cost at which that right issue was allotted to him. Okay, the cost of right issue. If he exercises his right, then the cost of acquisition of the right shares would be the actual price paid to the company. Am I right? And so now suppose he got 50 shares at 200 per share. Now suppose Mr. X sells these shares. So what would these total 150 shares? So what would be the cost of acquisition? The cost of acquisition for 100 shares would be 150 per share. This way he got original allotment, and cost of 50 shares would be 200 per share, which he got into right issue. Is there any confusion in it? Perfect. Now Mr. X became smart. He said, I have a right. Let me renounce that right in favor of some other person. See, company को क्या चाहिए? Company को पैसा चाहिए, right? Company needs money, company needs capital. Mr. X acted smart. He said, I don't want shares. I have already 100 shares and I don't have that much capital also to invest right now. So he went to Mr. Y. Mr. Y, he said that I have an offer from the company that they will give the shares at 200 per share, and Mr. Y was desperate to invest. Okay, so he said Mr. Y was desperate to invest. Company though always will go to the shareholders. Y was not a shareholder. So X went to Y and he said, I have a scheme. Okay, and he said that company is giving the right shares at 200 per share. I will give you this benefit, but for my right, which I got, I will give you that right for 20 per share. That means you take that share for 200, but for that right you have to give me 20 per share का price. So Mr. Y को तो फिर भी win situation लगा. Why? Because the share price was 300 and he's getting it at 200 plus 20. 200 he will give to the company and 20 he would give to the person Mr. X. Why? Because we announced that right in favor of Mr. Y. And for that right, he is giving rupees 20, correct? So Mr. Y के लिए cost of acquisition of these 50 shares would be 220, which is the purchase price of those shares plus of those right to acquire those shares. Okay, so Mr. Y के लिए cost of acquisition would be 220. Any doubt up till now? No. Correct? So X के लिए original allotment का price original allotment हुआ. If X would have exercised, it would have been 200 per share. But since he re-announced his right to Mr. Y, and Mr. Y would be paying 200 for the share and 20 rupees for that right benefit. So 220 would be the cost of acquisition of 50 shares for Mr. Y if Mr. X does not exercise the option and re-announce it in the favor of Mr. Y. Correct? Yes. In सब चीज में one thing no one noticed that Mr. X has transferred his right, relinquishment of right. He gave up his right on his own, and relinquishment of right is a transfer. Correct? Yes, we studied it. Relinquishment of right is a transfer, but did he transfer shares? No, he just gave up that right. He just gave up that right. So what would be the impact in case of capital gain? Is there a transfer? Yes, there is a transfer. What was the asset? The right was the asset. So the capital gain would be here. The full value of consideration which Mr. X received was 20 as a right, right? And what was the cost of acquisition for that right? Nil. The cost of acquisition for the right entitlement was nil. Hence, he is getting a capital gain of 20 per share or 20 per right of each share. Got it? So, whenever a person is re-announcing the right in favor of another person and that other person exercise, there would be two impacts. First would be the cost of acquisition which you have to take care in case of the person in whose case the right is re-announced. And second is कि right को re-announce करने में there has been a transfer of that right amount. I am not talking about the share amount. X has not given any shares. He has just given up the right. So for that right, he took 20 per share. So this would be the impact in the hands of Mr. X. Clear? Take a moment to absorb it and let me know if there is any query from either bonus shares or your right shares. Himanshu, Menon, what is the problem for the bonus part? See, bonus share set is very simple. Bonus shares are the shares which you get for free. So if I get any shares for free, suppose I am Mr. A. Okay. I'm getting bonus shares for free. I was already 100 shares का owner, ठीक है. I purchased these 100 shares in 2019 at rupees 150 per share. ठीक है. Now in 2021, the company gave me 10 bonus shares. And I sold all of these shares in February 2022 for rupees for rupees 200. So what will happen? My full value of consideration would be for 110 shares into 200 less my cost of acquisition of 100 shares, which would be at 150, less my cost of acquisition of 10 shares, which would be at a price which is nil. So no cost of acquisition for these 10 shares. So what would be my capital gain? 7,000. Without? No. Now let's take an example where the shares were allotted to, अब हम लेते हैं, the shares were allotted to me in 1991, okay, for the same price in 2001, and bonus shares were allotted in 98-99, okay, and as on 1st April 2001, the price, this was suppose this was 10 rupees per share, this would have been bonus shares है तो ये nil पे हुआ होगा. Bonus shares would have been at nil. These were 100 shares which I had, and I got 20 bonus shares. Okay. 100 shares I purchased at 10 per share. I got 20 bonus shares again in 98-99 for a nil value. Now, as on 1st April 2001, I have to bring it to the FMV. FMV of these shares as on 1st April 2001 was 25 rupees. So, pehle to, what my comparison goes, cost of acquisition or FMV, whichever it is higher, whichever is higher. So as on 1st April 2001, my cost of acquisition for the shares, 100 shares का भी हो जाएगा 25, and bonus shares का भी it would be 25 because nil and 25 में obviously 25 is the higher. Clear? Any doubt? No. Now, suppose these shares were listed shares, and then the fair market value as on 31st January 2018 is 200 per share. Okay. Now what will happen? I will compare the cost as on 1st April 2001 with the FMV as on 31st January 2001, and suppose the sale price is obviously 300 per share. Okay. I will compare the cost with FMV, and sale price is obviously higher, so FMV plus cost, whichever is higher. So my actual cost of acquisition for the purpose of this gain would be 200 per share for both normal shares which were allotted and the bonus shares. So simple to go step by step is first, if it is after 1st April 2001, I believe the answer was not available. I'm so sorry. The screen was not available. Please see the example first. Sorry. I'll explain it again. Quickly, I'll take time and explain it. Again. Mr. A had simple sa back to the story. Mr. A got allotted 2019 में 100 share for 150 per share for which he paid the price. 2021 में he got 10 bonus shares. Okay. Now when he sold all of these shares at 200 rupees, what will happen? Full value of consideration would be 200 into 110 shares, which is 22,000. Cost of acquisition of this 100 shares would be 150, and for this 10 shares would be nil. So my gain comes to 7,000. Simple. Okay. Now let's take another example where the shares were allotted in the year 1990-91 and he purchased 100 shares for 10 per share. And then he got bonus shares in the year 98-99 for a zero price. But now as on 1st April 2001, the FMV per share is 25%. So for both 100 shares, the FM would be 25 because 10 and 25, whichever is higher or whichever is benefit to the assessee, okay, those 100 shares which were allotted. And for these bonus shares, which were at nil and FMV as on 1st April 2001, FMV for 20 shares would be 25. Now, as the story proceeded, these are the listed shares, okay? And he is selling those shares at 300 per share price, say in year 21-22. The FMV as on 31st January 2018 is 200 per share. Now what will happen? First he'll compare these, whichever is lower he will take. So 200 per share is the lower. Now he will compare this FMV as on 31st January 2018 to the cost of acquisition which came for the asset which was allotted before 1st January to 1st April 2001. So we'll take the cost of acquisition as on 1st April 2001. So compare this with this. So cost of acquisition of 100 shares would be 200 and of these 20 shares also would be 200. Clear? So can I say to go step by step, what will happen is he will be it before or after. First, if it is before April 2001, सब कुछ bring it to 1st April 2001. ठीक है? Then, if there is no story of April 2001, then it is very simple. You have what you have. The bonuses would be at nil price always. Then, if FMV as on 31st January 2018 also comes in and pokes you, then compare it with the cost of acquisition and FMV. Compare it with the cost of acquisition and FMV after comparing it obviously with the selling price, cost of acquisition and FMV. That cost of acquisition would be either before, after 1st April 2001 wala, or if the shares were allotted before 1st April 2001, then it would be FMV as on 1st April 2001. So पहले अपना cost of acquisition को freeze करो by seeing whether 1st April 2001 is getting impacted or not. Then compare it with the FMV. So go step by step. Okay? Is it clear now? So sorry for the screen freezing. Is it now clear? Kanni, Preeti, Tisha, Siddhapa, Abhinay, Manujat, Aradhna, Surya, please tell me, is it clear? Ramakrishna, Aradhna. You can take this as an example also so that it might help you. Pooja, notes you will get, but the class explanation, make yourself notes, take an example to absorb this. I'll give 1 minute to understand. Okay, I'll definitely give the notes. Please, students, before focusing on the notes, try preparing self notes. Make a habit for you. This will help you in final level, coming from a personal experience. Kaveri, see, 7,000 कैसे आया? Simple. That is the simplest case. There is no hitch pitch. Simple सा case है. Forget everything. FMV as on 31st January 2018. Forget everything. I got 100 shares at 150 per share. Okay. I purchased these shares. I purchased these shares, 100 shares at 150 per share. Then 2021 में I got 10 bonus shares again. Did I pay for the name itself? Bonus means I have not paid anything for it. For these 10 shares, I'm not saying for 100, for these 10 shares. Okay? So now I'm selling all these shares at 200 per share price. So full value of consideration would be 110 into 200, which is 22,000, less cost of acquisition for 100 shares is I paid 150, so 15,000. But for these 10 shares, the cost of acquisition would be nil. So for bonus shares, always the cost of acquisition would be nil. Hence, I got 7,000. But if the bonus shares were allotted before 1st April 2001, you will bring it to 1st April 2001. If bonus shares were allotted before 1st February 2018, we'll bring it to that grandfathering mechanism which we did. Okay? So step by step, do it and you'll get it. Okay? Is it clear now? Pooja, for long-term assets, we index. For long-term shares, also we index, but we do not index the shares which are equity shares of a company which is listed on a stock exchange, and STT is paid at both purchase and transfer, and equity-oriented mutual funds which are which are listed, but STT is paid on the transfer date. So if there's an unlisted equity share, if it's an unlisted equity share, you will do the indexation. You will do the indexation. Okay. Okay. Great. Now, okay. So now we move to another concept, which is understanding for intangible assets. Intangible assets. So intangible assets में आपका क्या आता है? Goodwill, either of business or profession, trademark, brand names, copyright, permits, all of these things. Okay. So intangible assets, if it is self-generated, if the goodwill is self-generated, you have generated the goodwill on your own, then the cost of acquisition would be nil. Suppose I am selling my business and I'm selling the goodwill. Okay, and that goodwill is self-generated. That goodwill is self-generated and I got rupees 5 lakhs for goodwill. So 5 lakhs would be my full value of consideration, but the cost of acquisition would be nil. the cost of acquisition would be nil. If I've actually paid a paid a price to purchase it, then whatever is the purchase price, that would be my cost of acquisition. Is it clear? Yes. Students, cost of acquisition में one concept which I'm deliberately leaving is cost of previous owner. So previous owner, section 47 and 49 is something which we'll do in the class which is day after. Very, very, very important concept. 47, 49, and we'll touch 55 section again. So 47 is cases which are not transfer. 49 is cost of acquisition in certain cases, and section 55. So our next target would be in the next class would be to cover these things. So do not worry if this previous owner concept comes to you along with section 45, subsection 1, 2, 3, 4, and 5. So we'll cover these things in the next class, third class, and fourth class we'll be covering exemptions. Along with that, we'll be covering section 50B, 50, 50C, all of these things. And in the last class, we'll be talking about the rates. Okay, so this is what we'll go step by step. Back to it. Intangible assets, if self-generated, cost of acquisition nil. If actual price is paid, then purchase price. Okay, but here one thing remember, if you have seen goodwill earlier, goodwill which was purchased, उसपे depreciation was allowed earlier at 25%. But now goodwill has been removed from the purpose of block of assets. If you remember your section 32 while doing PGBP, goodwill has been removed from the definition of block of asset. So what would be the cost of acquisition of such goodwill on which depreciation was charged? The cost of acquisition of such goodwill on which depreciation was charged would be the purchase price minus the depreciation which has been charged and claimed by the assessee. So suppose the goodwill which you have purchased was for which was purchased in 2015-16. तो 15-16 में आपने depreciation claim किया होगा, 16-17 में, 17-18 में, 18-19 में, and 19-20 में. So that 5 years the depreciation would be reduced from the purchase price, and then you will get to the cost of acquisition, which you will reduce from your fair value, full value of consideration. Clear? Only in those cases where depreciation is charged. Clear? So with this, we cover up the concept of cost of acquisition. Now we move to the true important concept, which is left in your section 48. Okay, before that, let me now come to cost of improvement. 1 second. ये तो हम सबने cost of acquisition के लिए बहुत पढ़ लिया, right? Now let's come to the cost of improvement. Cost of improvement is nil when we talk about intangible assets. When we talk about intangible assets, cost of improvement is nil. Now, if we talk about, say, building. Building का हमने at the beginning of the class we understood whatever is the cost of acquisition, that would be indexed, and whatever is the cost of improvement, that would be indexed. Right? Yes, you index that. Cost of improvement को year of improvement से you index, cost of acquisition को year of acquisition से you index to the year of transfer. Now, what if the building was purchased in the year 95-96? So cost of acquisition, suppose, was 95-96, let's say 15 lakhs, and cost of improvement, which you did it in 97-98, was 3 lakhs. Okay. Now, the fair market value as on 1st April 2001 is given to you is 22 lakhs. Okay. Now what will happen? Which value you will take? 15 lakhs and 22 lakhs. And you will take obviously 22 lakhs. What about the improvement? What about the improvement? So wherever we are talking about the capital asset which is acquired before 1st April 2001, the cost of improvement always has been, which is done in for that property. The fair market value includes that cost of improvement also. The fair market value includes that cost of improvement because fair market value is for the whole building, right? Is for the whole building. So in that case, if you've taken 22 lakhs, this 3 lakhs there is no point. This 3 lakhs there is no point. Clear? So this 22 lakhs includes 15 and 3 both. This 22 lakhs includes 15 and 3. Clear? बस यही छोटा सा part है which people have to take care. Any cost of improvement before 1st April 2001 has to be ignored because that fair market value would absorb, obviously, that would have that cost of improvement. If suppose the building was purchased in 95-96, but instead of 97-98, the improvement happened in 2002 and 3. Then what will happen? You will take 22 lakhs, which will be the fair market value of the building, and 3 lakhs ko you will index. 3 lakhs ko you will index as per 2 and 3, and 22 lakhs ko you will index by taking 100 as your base. Clear? Any query? Sneha, what system in charge? No problem, Kaveri. Very good, Mahesh. What is the concept of period of holding for short-term capital gain? Period of holding, Rekha, it is always simple. You have to see the months. Now, the point is to the explanation. If you're asking, explanation tells us that from what point do we have to see the month? From what date we have to reckon that calculation of period of holding, which we'll do once we cover all these sections. Okay. So simple, for any cost of improvement which has happened before 1st April 2001, that would be deemed to be included in your fair market value as on 1st April 2001. So you have to ignore that. Any cost of improvement which has happened after 1st April 2001, but the asset was acquired before 1st April 2001. So the fair market value which you are taking on 1st April 2001 is for the acquisition pass. That does not include your cost of improvement. So the cost of improvement which has happened after 1st April 2001, that you will index. Okay. Now to the last concept for the class. Okay. Everyone, please, again on the screen, this is also very, very, very important. Now, we are talking about first proviso to section 48. Again, I'll say final level. So this is a very important concept. Final level, maybe students do not have the clarity of this concept. So let's try. It's a very, very simple concept. First, let me tell you why this concept was introduced. There was a person who invested in Indian stock market. He came here. Sorry. He came here with $10,000. He invested in Indian stock market. When the dollar price was 50, suppose, and he got 5 lakh rupees he invested in shares. So the cost of acquisition of shares was 5 lakhs rupees. Okay. What happened? One second. What happened? He saw the shares price going to 7 lakh rupees. Okay. He saw that, wow, the share price is going to 7 lakh rupees. Let me withdraw it. And he saw that I'm making 2 lakh again. Right? His consultant, his advisor was happy. Sir, you have made 2 lakhs again. Isn't that amazing? You invested 5 lakhs rupees, you're getting 7 lakhs rupees. He was also very happy. Now, what happened when he converted the 7 lakhs rupees which he got? He saw ये 7 लाख रुपीज सपोज $75 का रेट चल रहा था. Okay, he converted, he went back to his home clan by taking the 7 lakh, and he saw that $75 के हिसाब से I'm getting only $933. But that person was telling me that I have made a gain. But now what has happened is when I've converted the same back in my foreign currency or back into my native currency, यहाँ पे तो I'm facing loss. In fact, I'm not even recovering what I invested. I'm not even recovering what I have invested. So where was the loop? The loop was in the foreign currency fluctuations. If he would have paid because of 2 lakhs tax, because of 2 lakhs capital gain tax, एक तो वैसे ही उसको loss हो रहा है. Ultimately, he's facing वैसे ही loss of some $6 or $7, right? And यहाँ पे capital gain भी दे. So this situation actually happens when people non-resident invest in India. And when they reconvert their capital gains into their foreign currency, into their native currency, they see the fluctuations have impacted a lot. Right? So to deal up with this situation, such a situation, the government introduced a concept only for non-resident. To cover the currency fluctuations, government introduced a concept only for non-resident, number one. Number two, only for Indian, if they are investing in Indian companies ka shares or debentures. So the asset is Indian companies ka share or debenture. That shares or debentures can be listed or can be unlisted, does not matter. Indian company के shares or debentures, whether listed or unlisted, and even if the gain is long term or short term, does not matter. And it's a mandatory thing to do. What is the thing to do? A mandatory provision as per first proviso. Now, what did they say? They said that you calculate your capital gain in dollars. In dollars, you calculate the acquisition in dollars, you calculate your capital gain in dollars, and then see if you are eligible or if actually any amount which is getting taxed in India or not. So is to cover them for the fluctuations, they said you calculate all your gains, all your purchase price, your cost of acquisition, your full value of consideration, everything in dollars, see if you're actually getting the gain or not, then only pay it in India. Otherwise, do not create India. But please note that this provision is a mandatory provision for non-residents, non-resident FIIs, everyone. Uh, Only for Indian companies, because shares or debentures, whether listed, unlisted, does not matter. And in the nature of short-term or long-term capital gain does not matter. But here, one thing remember, there would be no indexation. No indexation. So, ma'am, how to calculate the gain? आपको कुछ नहीं करना. Whatever consideration is given to you, you convert it into dollars. Whatever cost of acquisition is given to you, convert it into dollars. Whatever transfer expenses are given to you, convert it into dollar. Then, whatever capital gain comes, finally, after converting into everything into dollars, convert it into rupees. Okay? Then you will see whatever is the final capital gain or loss. But your question would come, ma'am, what dollar rate has to be taken? What rates have to be taken, right? So the rates here have to be taken are the average of TT, telegraphic transfer buying rate, and telegraphic selling rate. इसका average लेना है on date of transfer. If I'm talking about full value of consideration, if I'm talking about cost of acquisition on date of sorry. If I'm talking about cost of acquisition, we'll do a question also, don't worry. If I'm talking about cost of acquisition converted into dollars or by taking average rate of buying and selling on the date of actual acquisition, quite obvious. And transfer expenses could be average rate of buying and selling on the date of expenses. Okay, whatever capital gain will come, it will come in dollars. Reconvert that into rupees by taking telegraphic buying rate on date of transfer. Clear? Now let's do a question. Suppose a person, let me give you. Okay, now let me give you an example. Telegraphic buying rate, telegraphic selling rate. Okay, buying rate is 50, 65. There is no example there of this in your module. Please note it, but after doing the question, okay? 54, 67. Whatever the average comes here. 52, 66, right? Now, the question which is given to you is, the person invested 3 lakhs rupees in the market and he got a gain of 4,80,000, a non-resident. Okay, 3 lakhs rupees and he got the gain of 4,80,000. Now you will see how to calculate it. Is 3 lakh ko first you will convert into the cost of acquisition. 3 lakh, which is my cost of acquisition, you will convert it into dollars by taking the average of buying and selling rate on the date of acquisition. Sorry, I wrote it ulta. One second. ठीक है, या सो 3 lakh को I convert it into dollars. 3 lakh को I convert it into dollars by taking average rate of buying and selling. Convert it into dollars, simple. I think you will get divide by 52. You will get 5769. 5769 dollars. Okay. And 4,80,000 जो उसको actual consideration मिला बेचने पे, उसको भी I converted into dollars on the date of transfer, which would be average by average rate. 4,80,000 divided by 66, which would come to 7273. Okay. So what is my capital gain here? 7273 minus 5769, which comes to 5679 or 5769. Sorry. 9 minus 7273, which comes to. So there is a capital gain, but the capital gain is for how much amount? The capital gain is for an amount of $1,503. Okay. Now this $1,503 now would be reconverted into Indian rupees to get the actual capital gain after taking into account of foreign currency fluctuation. That 1,503 would be converted it into the buying rate, because RBI will buy it, the dollars, into the buying rate on the date of transfer. सबके लिए average लेना है, but capital gain को convert करते time you have to take the buying rate. What did I say? For conversion, every time you have to take the average rates, but for converting capital gain into for converting capital gain, which is in dollars, into Indian rupees, you will take the buying rate. So 1,503 into 65, which will come to 97,745. So this is my capital gain, which otherwise you would have seen it as 180 if you have not taken foreign currency fluctuations, right? So this is not a true picture. This is a true picture. You can copy this example, and for homework, you will do the same question, but by taking 3 lakh ki jagah, the cost of acquisition as 4 lakh. Same thing as homework, but by taking cost of acquisition as 4 lakh. किसी को कोई doubt? Purpose of this clear? Why? Because fluctuations actually do matter the actual impact, right? And which we saw that after taking fluctuations, the actual capital gain in rupees is coming as 97,745, which otherwise would have been appeared at 180. Okay. So this is how you have to do it. Calculation is extremely simple. The rates which you have to take are always average rates on the date of buying and selling respectively. But when you convert capital gain, which comes into dollar into rupees again, you have to take only the buying rate, not the average rate. This is given in your Income Tax Act. Clear? Which question with $950? One second. Here in this example, who had asked this question? Trisha, for you, here in this example, 7 lakh को अगर वो $75 में convert करते, you would have got $933 in returns, right? And when he would have gone into his home country, he would have realized this is a law situation. ठीक है, 7 लाख को 75 से convert करो, you will get the same amount. Five, 6, 7, 9. तो 5769 कैसे किया? He had invested 3 lakhs. उसको अगर मैंने डॉलर में कन्वर्ट किया by taking average of buying and selling rate, which would be 52. So 3 lakhs divided by 52, the dollar price would come as 5769. Buying rate and selling rate stuff, I think you will learn it in your FM also. So RBI का TTBR is telegraphic buying rates, telegraphic transfer selling rate. RBI, these are the rates at which RBI purchase the foreign currency. So RBI will purchase foreign currency, will get you Indian rupees. RBI will sell foreign currency and you will get them Indian rupees. So RBI will purchase foreign currency at a lesser rate. It will sell foreign currency at a higher rate. So always sell rate would be more than the buy rate. So this is the rate in which RBI purchases and sells the currency, foreign currency. Both of the things would be given to you in question if in case a question comes. If in case a question comes, because generally such question come at a final level, but since it is there in your syllabus, so this is how we have to do it. Similarly, this is your first proviso. Similarly, there is a proviso which is your fifth proviso for rupee denominated bonds. Usme bhi they say the same thing, that rupee denominated bonds ke case mein also we have to do the same thing of currency fluctuation, but that is again not very important, but you will understand it if you read it. Okay. Clear? So with this we have completed the concept of section 48, 55, cost of improvement. But yeah, we have left few things. One is ESOPs. ESOPs ka pura concept of taxability, I will do it in the next class. Exact full taking into mind what is taxable in whose hand, how much is the amount will come, what if the gift comes. So that ESOP ka part is left. Otherwise, everything is completed. So next class, my course of action would be to start with the concept of previous owner. We'll cover cost of acquisition in certain cases. We'll cover exceptions to some general rule of year of taxability. We'll cover ESOPs. Okay. So please be prepared. Again, go step by step. There is no hush. We have sufficient class to cover the things. And capital gain, if you understand all of these things at inter level, I'm telling you, there's nothing left at final level. You people will self-study yourself by when you come to the final level. But yeah, clearing your concept should always be the aim. Any queries? Please do read the section which we have done. Section 48, section 55, rights, shares, ESOP, and do this 4 lakh wala part as homework. Illustrations, why I'm not giving you as homework is, the sole reason is illustrations have certain elements which we have not done yet. That's why no homework for illustration for the time being. Okay. Any other query? Okay, Kaveri is asking, how did we calculate 97745? 1 second. It's 97745. I got this as capital gain 1503 in dollars. That capital gain has to be converted into rupees. Dollar rate is 65. When I'm converting the capital gain into rupees, I only have to take the buying rate. So 1503 into 65, 97745. Clear? 1503 into 65, 97745. Clear? Anyone has any doubts? Can we wrap up? Students, in case any of your question gets missed, please ask it by the agar during the class also I miss any question, ask it by the end of the class or ask it in the starting of the next class so that your queries do not go unanswered, okay? Because sometimes we get so much reply altogether that we might skip something, okay? Kaveri, is it clear? Good. So thank you so much. See you in the next class. All the best. Do study well. Sir, done.